Cool. All right. Okay. What is up? We talked a little bit about stocks on the last one because that's been a conversation that we've been having in Patreon. It's also been something that we're having in the Peppies because we're closing on a couple of deals that have substantial cash in the bank. And so I want to talk about one of the strategies that we use to maximize not only if I'm buying a business and we're taking over the bank account, there's a lot of there may be not even a lot, but there's some money in there. It's a strategy I use personally. And like I said, something we've been discussing in Patreon. So, talk about the concept of selling calls. We may have already taken that video down from YouTube. But when it comes to generating income, the really cool thing about all of this is that depending on what percentage the income is of some of these strategies within the business, that can be included in the multiple as long as it's like a small amount compared to the overall income of the main business. But if you're talking about this is a side part, but it is an integral part of the company, and you're using these income strategies, these simple strategies can basically increase the value of your business because it becomes a part of your normal operations. And obviously, you'll teach some of these strategies to the person that's buying the business. So, we've had deals. We've actually got one business that's the core business is in the music space. And we start to use some of these strategies, including notes, including crypto. And that part of the business is, if not two times, at least three times the size of the core business. And so the strategy there, it's kind of interesting because we had somebody who was a lead in that business, and they had some family things come up. So we really didn't do much with the business itself. But with these other types of kind of strategies, we still basically tripled the size of the business. So this is something that you do want to pay attention to. It can make a huge difference when you're exiting. If you can make money with one of these strategies, it adds 50,000 whatever to your business. That's great to have. But when you can sell that business at a total three multiple, and then this adds another 150,000 to the value of the business, the valuation, that changes everything. So it's important to pay attention to these, regardless whether you take a zero from that or add two zeros to it. There's just a lot of potential. So before we get into the strategy, I'll say be sure to like the video. Thanks for popping in. Put any questions that you have in the comments, and I'll be sure to get to them. We'll start off with this one. I much appreciate it, Cowboy Del Norte. Awesome, says Ace the Champ. I certainly appreciate that. All right, so let's jump in. This strategy is, you can kind of take it one of two ways. It's either a way to get a huge discount on every stock that you buy. And so it's kind of the opposite of what I was talking about with Jared and in Patreon. And we got some really, some other folks that asked some questions. And so it kind of led into the direction of this, but it's kind of the opposite. You're basically selling a put, which is an option that gives you the right to, or more than the right, like you have to buy it if it goes below a price. But it basically is telling somebody you will buy this stock at a certain strike price if it goes to that price or below it. So if it goes below the strike price, then you're responsible for buying that stock at that price. So dynamically, what does that look like? Let's say you want to buy a stock at $90, and right now it's at $100. You can sell somebody a put that basically says, hey, if this stock does go down to $90, then I'll buy that stock from you. And that $10 is your money. So you get to have that $10, and the premiums will not. This is not the exact numbers. You'd actually get paid a premium on top of that $10 if this were the real case. Let's say it might be $15, and you have the responsibility of buying that stock at the 90 dollars. So if the stock declines below that strike price, you're going to buy the stock from the seller, and essentially this is they call it in the money. The option is in the money. So that's one of the scenarios that can happen. The other scenario is the stock just stays the same. So if that $100 stock stays at $100, then you get to keep the $10. You don't have to buy the stock, and you can go and do that again because you still have the funds to be able to buy the stock. So you could go and sell that premium the next month, depending on when you set your strike date. You can sell that again and get another $10 per stock. So it becomes an income strategy. One of the things is you're basically generating income from this strategy, but it's also something that if it's an income strategy that's amazing if you do want to buy the stock. Because if hey, I'd love to buy the stock even where it is at the $100, and this is an opportunity for me to get $10 and get to the opportunity to buy the stock at $90. This is a win-win. And so it's interesting, especially for us, where our goal is we're trying to maximize the really return, the yield of the cash that we have within the businesses and the cash that we have within a fund. This is a really neat strategy to not tie up the money in a long-term type of asset where, obviously with private equity, it can take it's a lot more difficult to buy and sell. This becomes something liquid where if, no matter where we are in the process, if we have the option, we can sell that option if we need to, once we find an opportunity to buy a private equity deal that's going to get us a higher return. We can, if we have to buy the stock, we still exit out of that. And so it's providing us liquidity. It's providing us tremendous. It's not uncommon to get a 10% per month return. So you're talking about, even if it's half of that, 60% return a year, that's a huge difference. And, we're buying a couple businesses right now. One has 50,000, one has 100,000 in cash is in the bank for that business. And so it's not that we want to take all of that and do a strategy like this, but we want to mix it. This is just one of our strategies for maximizing the ROI on sitting cash. So you're able to do this trade if you have the cash and margin to be able to buy the stock. That's one of the most important keys to this. It's like you can't do this. It's like some kind of no money down strategy. But the really cool thing is you can literally buy the business that has the cash and then implement this type of strategy. So let's talk about some of the pros and cons. One of the most important aspects, I think, of this is you only want to do this on a stock where you want to buy the stock. You can go out there and find really crazy premiums and get these great returns, but a lot of times it's on a stock that you don't want to own. So you want to do this where you do want to buy the stock, but it's a huge benefit if you do want to buy that stock. It's just like, instead of you going, it's funny that a lot of people should just be using this strategy in their personal life. But if you want to go and buy that stock, then why not get paid to do it and be able to buy the stock at a discount? So that's benefit number one. If you're already going to buy the stock, you're going to be able to buy it at a discount. Benefit number two is our goal is always income. And one of our things is we want to be able to take that income and then reinvest it. So this is one of those strategies where you can get the income from this strategy, take that income, and it's not just, oh, now we've got that in the bank. What really generates those returns. I was talking about one of the peppies where we're doing calculations on return on a deal, and one of the members was like, "Hey, this just has to be impossible. There's I'm getting an 800% return." And the only way that you're doing something like that, there's actually a lot of things that are involved with that. But one of the most important things is every time you get dry powder, you're taking that dry powder and you're reinvesting it. That's just the foundation. Now, in your personal life, you should be doing the same thing. I think a lot of people would be a lot more free if they looked at every dollar as an opportunity to at least turn that dollar into $1.10. And so if you're just constantly like, it's so crazy to me. And I talk about this in the $1 million brain training in Patreon, but it's crazy to me and just outrageous, especially right now with where inflation is. It's completely outrageous to go and work for money, to put that money into a bucket that basically has a hole in it. And the hole is inflation. So as soon as you go and you make a dollar, that dollar starts to become less and less and less. And for us, when we're maximizing our kind of ROI on the front end and doing the work to get a really great income, or even if you're just if you're an employee and you're getting income from your employee, if you're going to do that work, you're going to take those dollars and make sure every dollar is maximized. And this is one of the strategies to be able to do that. So you want to take this income and immediately put that income into something else that's going to get a high yield. And this is, if you're an individual, this is how you retire early. And that is really at the foundation. Minimizing expenses, making sure you're spending as little money as possible. And then on the other side, taking that money and maximizing the ROI. If you can minimize, there's like a lot of people that would literally retire early. FIRE is one of those things they call it, financial dependence, retire early. Like there are a lot of people that would hit that, especially with private equity, with being able to buy a business that's going to generate income. If you're maximizing every dollar, i.e. minimizing the expenses and maximizing where you put that money to generate ROI, you're going to retire a lot quicker. And kind of the third benefit is, for us, when we're buying businesses and we're doing more of the private equity side and not doing the asset buy side, this becomes something that in the interim of just, when cash is sitting there, we get a good ROI on that dry powder because it's a liquid strategy. It's not dependent on an asset that's going to be difficult to buy and sell. Now, what are the downside? What are the risks of this strategy? It's important to understand that if you really like a stock and you think it's going to run up, then this may not be the best strategy to use. If you feel like this is the $100 stock is going to turn into $200, then just buy the stock. You don't want to take the chance that it makes that run up while you're at waiting for it to go down to 90. So you want to understand, where do you think this stock is going to go? You want to, kind of base using this strategy off of it, because you will miss out on that upside. What that person on the other side of that put option is accounting for is, hey, I'm going to protect myself on the downside. So, I'm going to pay somebody to protect myself if this stock goes down, but obviously they want it to run up as well. So you want to pay attention to that. The second thing is you may never buy the stock, and you want to be okay with that. I've had these where just, whether it's a weekly or a monthly, I'm doing it and I'm kind of following the stock, and maybe it's just at a stable price or whatever, but I'm not in a position where the stock just doesn't go down enough, and where my position is, it doesn't hit that strike price for me to ever be able to buy the stock. Personally, in all of my stuff, as long as I'm getting a great ROI monthly, I'm okay with that, because that money is still getting an ROI. I'm not necessarily ever doing it because I'm obsessed with owning this one stock. It's just, hey, here's a great premium. I wouldn't mind owning the stock, but my goal is the income. My goal is getting paid that premium. All right, let's bounce out of here. Let me know if this is something of interest. There's some really amazing dividend stocks that are doing that we're also putting some funds into. They're doing like 15-20%. So let me know if this is a strategy that you're interested in. And the other thing we're doing with dry powder is in the crypto market. And I'm happy to share some of the projects that we are putting money into. You know, with everything that I talk about is something I'm actually doing. It's not imaginary. All right, let's get to a couple comments and we'll bounce out of here. Hope y'all are having a productive day today. 285, what's up, homie? This is one of our Patreon folks. Thanks for popping in. It says, what's good, Ace? Appreciate it. Easy Money Mellow, always good to see you taking some time to say hello. I know you staying busy. And 285 says, it's very enlightening. Awesome. Let me know if there's something y'all want me to, if this is the type of thing y'all want me to discuss more, and I am happy to do it. Be sure to like the video. If you're not subscribed, subscribe. If you haven't yet, check out the Patreon, patreon.com/Ace Chapman. Later.